Welcome to Financial Health, a 5-minute conversation with Jason Weier of Weier Wealth Management, focusing on your current and future financial goals. This is Financial Health on WOMT.
Welcome to Financial Health here on WOMT with Weier Wealth Management. And with Weier Wealth Management is Jason Weier. How are you today, Jason?
Coincidental, yes. Jason is here. Weier Wealth Management.
One of these days we'll have Carrie back in.
That would be. We should have her start doing this show, I think.
Carrie,
people want a different voice.
Hey, don't get me wrong. You have a sultry voice. Jason,
Moving on.
Jason, last week we ended the episode abruptly. I wanted to touch on ETFs, but we didn't.
You teased them.
I know we didn't have enough time because, Jason, I am just now at 33 years old, understanding what ETFs are, and I had a hard time even saying it the last time here. Exchange traded funds. So ETFs, I noticed these when looking at portfolios. You have stocks, you have options, you have ETFs. And I was like, what is an ETF? And it's so, please tell me if I'm wrong in this definition.
Tell me what you know, first of all.
It is a fund in which is created whether it's, I actually have this down, stocks, bonds, or other assets.
Okay, so far you're good.
So really, you're investing in this fund or this pool, really, and it gives you a vested interest in said fund. And that fund could be, I saw ETFs for real estate. I saw ETFs for commodities. I saw ETFs for currency even. So, Jason, give me the financial advisor definition of ETFs.
Wow, I mean, you did a good job, though.
I attempted, man.
You're correct in everything. There's nothing I have to correct on you, but to expand on it.
Yeah.
How is it different to a mutual fund? Maybe, is that a good way to say it?
Yeah.
Do you know?
No,
okay.
I don't, and that's a very good question.
So mutual funds have been around for decades. I believe 80 some years. Maybe even 90, 100 years at this point in time.
Wow.
So a mutual fund, if you know what a definition is a basket of common holdings, we'll call it. So a basket of stocks or a basket of bonds or a mixture of those.
Okay.
But it's an easy way to enter into investing. It's an easy entry point to start investing because it's a low minimum to start with a mutual fund. So it's a big basket of stocks. It's an easy way to diversify. But the only thing is that it only trades once a day. So it trades at the end of the day. That's one thing.
Okay.
The other thing then is that it's not really tax efficient. So the inner workings of a mutual fund, they can buy and sell things, and that gets passed on to you as the fund holder in taxable gains then. So if I said those two things, does that help you with identifying how is the ETF different?
Yeah, yes, actually, it does differentiate because with ETFs, obviously those are not just once a day.
There you go.
So
they trade like stocks.
They do.
You can buy, you can sell it all within the same day.
Exactly.
You can't do it with a mutual fund.
And now, Jason, explain to me now, are there any differences in taxes with ETFs?
Absolutely. So before I go down that road, the ETF, another benefit of an ETF is typically that you can have a little bit more narrow focus on it. So you can get into specifically China or India or maybe consumer discretionary investments. So you can very well-pointed investments, very specific investments. So that's one more definition of an ETF in general compared to a mutual fund. Mutual funds are generally more broad. ETFs give you the ability to really fine-tune if you want to get into regional banks.
Yeah.
Something like that.
Oh, even like digging, Jason, when you say specific, you could get very specific with ETFs. And I think that's great. It's a great opportunity, especially if, you do see something on the horizon that you think is going to, pop up and you want to get in early. That's great. But also, again, the easy access is really nice.
So I'm going to answer your question now. Taxes. Again, in general, taxes are far more beneficial on the ETF side. So it's a lot more efficient. Part of us, we talked about this last time, putting those puzzle pieces together is keeping in mind how taxes affect your retirement planning. ETFs are a good way to help balance out or predict future taxes then. So taxes can be a little bit more managed better with ETFs or minimized far more efficiently with ETFs.
Interesting. Now, Jason, you wouldn't say, obviously, that, ETFs are better than a mutual fund.
Potentially, in a lot of cases, it might be actually.
Oh, okay.
I know. You didn't see that coming.
I did not. I did not. But I do see the benefits of ETFs, and now I do have the full understanding of a mutual fund.
One last thing. In general, most of the time, the ETF will be a little bit lower cost than a mutual fund too. So if all things being equal, if you can invest here and here, and the ETF checks all those boxes, in most cases, us as an advisory firm is going to lean more towards the ETF because it's lower cost. We can trade in, trade out a little bit easier, and it's better on taxation. So
wow.
In a lot of cases, we do utilize ETFs because of that simplicity and transparency.
Wow. Interesting. Well, Jason, thank you so much for the information. Listeners, if you have any questions for Jason, what is a good way to reach out to you, my friend?
Let's do the phone number first is 920-242-9470. Website has great resources, articles and videos and all kinds of stuff. Weier wealthmanagement.com. Weier is WEIER wealthmanagement.com. Follow us on Facebook. Look us up on LinkedIn.
Awesome. Jason, I'll talk to you next week. It's WOMT.
Securities offered through Advantax Investment Services, member FINRA SIPC. Investment advisory services offered through Advantax Advisory Services. Insurance services offered through Advantax Insurance Agency. Views and opinions presented in this podcast are those of Jason Weier and not of Advantax Wealth Management or subsidiaries. Opinions voiced in this material are for general information only, not intended to provide specific advice or recommendations for any individual. Performance reference is historical and is no guarantee of future results. All investing involves risk, including the loss of principal. No strategy assures success or protects against loss. This is a hypothetical example. This is not representative of any specific investment advice. Your results may vary.
Financial Health is heard every Monday at approximately 11:20 with Jason Weier of Weier Wealth Management. Learn more online at WeirWealthManagement.com. You're listening to WOMT Radio, a Seahafer broadcasting station.